G'day guys, one of mine and Simon's favorite things to do is to get super deep into the data. Now in today's video, we're going to give you a full market update from some of the best, the likes of what CBA, CoreLogic, SQM, Simon Presley, and a whole bunch of our other favorites are saying about the market this month and moving forward for the rest of the year. Sweet bro, so you've been getting into it this morning, which I'm super excited about. What is Simon Presley from Propertyology saying?
Now, Simon Presley from Propertyology has come out with a big report on the Australian housing market and has put out some predictions based on this analysis. And he actually believes that the majority of the capital cities and regional locations around Australia will see somewhere between about 2 to 7% capital growth in the 2023 calendar year. Now, one of the big catalysts for that is he says that overseas migration is back to basically pre-COVID levels. Now, there's about 200,000 or over 200,000 permanent residents moving to Australia this year and over 500,000 students coming to Australia this year. It's putting a lot of pressure on the rental prices, putting a lot of demand into the market as well. And some of the other key takeaways was the fact that the unemployment rate is the lowest we've seen since 1974, sitting at about 3.4% right now. And the average wage actually increased by 3.1% in 2022. And on top of that, Australian households have about $1.4 billion in cash sitting offset and redraw accounts at the moment. So Simon was really bullish about 2023 calendar year. He thinks it's going to be better than what most people believe. And then he went into the analysis about all of the different reasons why he believes that's going to come to fruition.
Amazing, bro. Like I always feel good reading Simon's stuff. Any of you guys that want to check out his website, Propertyology, and you can read his blog, his 2023 market update or outlook is a great article to start with. Now let's talk about another one of our favorites, CoreLogic. These guys are the biggest aggregator of data in Australia and have done an incredible job for many, many years collating and collecting data for us. So what are they saying at the moment? What's Tim Lawless saying over there?
Look, CoreLogic put out so much information, super happy for the information that we get from these guys. So I've just pulled out a few key pieces from some of their articles from early this year. Now, one of the major ones was the fact that 99% of mortgage holders are still making their repayments on time at the moment. One of the other catalysts for the fact that the Australian housing market looks like it is improving a little bit, according to the data from CoreLogic, is because that listings are about 19.9% below the 5-year average at the moment. So like 1 in 5 properties is not on the market that it historically has been. Now, CoreLogic's data has also been noticing that the rate of decline has been easing since December of 2022. And last month in February, the national index declined by just 0.14%, which was the smallest decline since they started rising the interest rates back in May of 2022. Now, it's been a hell of a few years here in Australia with the pandemic and the booms and the busts, but what they actually averaged out over the last 3 years since the pandemic began in March of 2020 is that the national housing values are up just 14.8% from all the way back in March of 2020. But when we look at the rental market side of things, since March of 2020, we've seen the rental market increase by 23.1% on a national average. So showing some pretty good returns there.
What I think is really important there, guys, for all of us to know moving forward is there's not a huge amount of stock on the market, but demand is coming back, which is going to put pressure on prices. And that's why I believe we're starting to see price declines easing and many, many buyers coming back into the market to pick up deals. Now, I was speaking with one of our clients, Charlotte, in the last week, and she said in her suburb, Balmain, there's properties selling for literally $1 million cheaper than they were in June last year. And she, as a high-income earner with a high-income partner, is looking at it as one of the biggest buying opportunities since the COVID market hit. Now, one of the big things that the media is scaring us all at the moment with is this idea of the mortgage rate cliff. So what this effectively they're speaking to is the fact that a few people in Australia changed from a 2% interest rate to maybe a 5 or a 6% interest rate around about June to September this year. Now, some people are afraid that that's going to put more pressure on those households, which obviously it will. But if we look at what CoreLogic's saying, 99% of Australia's mortgage holders are absolutely fine at the moment. They're paying their home loans on time. What this is saying to me, on top of the $1.4 billion that Simon Presley talks about and CBA talk about in people's offset and redraw accounts at the moment, is this is more of a media event than a physical event that's going to rattle the market. Awesome, bro. So another one of our favorites is SQM Research. What are these guys saying this month?
Yeah, I love with SQM. They just cut through the noise and go straight to the data as well, which paints a much more interesting picture. And, they've indicated that the national vacancy rate is holding steady at 1% at the moment. However, Brisbane, Perth, Adelaide, and Hobart all have a vacancy rate below 1% at the moment. The crazy thing is there's only 32,000 rental dwellings available to rent Australia-wide at the moment. So this is putting a lot of pressure on rents. And when we look at how much those rents have actually increased over the last 12 months, in Sydney, Melbourne, and Brisbane, the asking rents are up over 20% over the last 12 months. So it's obviously putting a lot of pressure on that rental crisis that's being talked about at the moment. And it doesn't appear that fire is going to burn out anytime soon with the amount of international migrants and students coming into Australia.
Now, based on history, anything below a 2% vacancy rate would be considered chronically undersupplied. So when every capital city and most regional markets are sitting in this place, and they want to bring in another, 700,000 people this year, we're going to have some issues. Now, one of my favorite updates I get each week is the CBA update. Now, CBA has been like an absolute silver bullet or like the golden goose for us in the last 3 years. It is very, very accurate in their forecasts and has been pretty much spot on. What are the guys over there saying at the moment?
Look, just a few little takeaways from their most recent update that we did receive in March, which was the fact that Governor Philip Lowe from the RBA has actually indicated recently that he may pause the interest rate rises. However, CBA actually does expect the cash rate to rise another 25 basis points at some point in April, which would actually bring that cash rate to 3.85%. They've been saying for almost 12 months now that they believe that the cash rate will get to somewhere between about 3.5 and 4%. So it's looking like we're getting really close there. However, what they've gone on to say is the fact that they do believe that the cash rate could drop before the end of 2023. They're not too sure by how much, whether it'll be 25 or 50 basis points. But they do believe that at some point in 2023, we will see that cash rate drop.
Now, one of the great things is some big data that everybody's waiting for should start spraying out in the next couple of weeks. And that data is going to give us a much better finger on the pulse of where inflation is truly at. And then with that data, the RBA can start making better decisions. The last one that we always like to check about, just because he's got a completely different perspective than pretty much everyone on the planet at all times, is Phil Anderson. What's Phil been saying in Akil over there at Property Share Market Economics this month?
It's quite eye-opening when you listen to the guys talk from Property Share Market Economics. And they recently did a webinar where they basically were just saying, do not listen to anything that you're seeing in the media right now, because based on their analysis, the 18.6-year real estate cycle is unfolding exactly as they anticipated. When we look at some of the stuff that Darren Wilson's saying from Property Share Market Economics, he actually indicated that the Australian property market bottomed out in December, and he does expect property prices to increase throughout 2023 in most locations. Now, what Phil and Akil is saying is the cycle is on track, and they expect 2024, 2025, and 2026 to be more like those boom conditions that we've seen in the past. So we'll see how things unfold.
I thought the article that we got this week had an interesting title. What was that one again?
That one was really funny because obviously we've just had these, banks collapse over in the United States. And, as soon as it happened, they basically put together this article saying Silicon Valley Bank collapses, major panic around the world. Oh no, worldwide panic, why you shouldn't care. So basically he just went into the analysis of the fact that Silicon Valley Bank has made some risky and bad investments during the pandemic, which is sort of unraveled. He's also said that, he wouldn't be surprised if there's some form of corruption going on there as well. And, he looks like as the information will come out, it'll give us a much better understanding as to why this has happened. He sort of said it's not uncommon for these things to occur at this stage of the real estate cycle as well.
I think the big thing, guys, as we get to the end of the media, scaring the absolute crap out of everyone in Australia for almost 12 months now, what happens is the news gets better, the media generally gets worse at the end because they're trying to squeeze the last little bit of juice out of the story. I believe as someone who's buying anywhere between sort of 2 and 5 properties every single week now for the last 7.5 years in Brisbane, is that we've seen a massive turn. Many more people like yourselves have been reaching out to us recently. for strategy sessions, you can do that over at our website, www.pumpedonproperty.com. We've also noticed the turn in the market, particularly in the affordable price range. What we've actually noticed is that there's many more people coming back. Houses are selling much, much faster, particularly in West and South Brisbane, and in some instances selling for $50,000 more than they were a few months ago again. So be careful, guys, that you don't wait for the mortgage clear for everybody to feel good. Now is, I believe, we're coming off the bottom or very, very, very close to the bottom, depending on how inflation goes. If you are interested in one of those strategy sessions, we can talk about where you are today, where you'd like to be longer term. We can also educate you on the market, and then you can take that with a grain of salt and smash it yourself, or potentially become one of the extremely small number of clients that we work with each week. But either way, I actually feel positive. I think the worst is behind us. I think the government's taken very, very hard, but very, very fair action. And I think they've hopefully been able to nudge the economy back in the right way. We might have even gone a little bit far in Australia, which is cool. Like, I love the conservative approach we take. And fingers crossed, we get some great buying opportunities for the remainder of the year, and then watch people start coming back into the market with confidence once interest rates settle, or as you said from CBA, maybe even potentially decline later this year.
Woo, that's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.